National prosecuting authorities say they'll be issuing summonses to taxpayers with outstanding tax returns as part of a continued compliance drive by the South African Revenue Services. The charge sheets are prepared carefully, and every instance of non-compliance for every tax type counts towards a separate charge. According to reports, some taxpayers face up to 30 counts of contravening the Tax Administration Act. Let's speak to the legal manager for Africa Tax and Compliance at Tax Consulting South Africa. That's Jashwin Baijoo. Good morning, and thank you so much for joining us. So tell us now, is this something new? I would have thought that this is something that SARS has been doing, or at least the NPA has been acting on in the past. What is different this time around, or what is the significance of this?
So what is different this time around is the last summons that came across our desks at Tax Consulting was with regards to charges of non-compliance, and those charges pertain to the non-submission of tax returns, covering corporate income tax, PAYE, and VAT, and ended up in a grand total of 29 counts of non-compliance, which would be classified as 29 separate charges against the taxpayer.
Now, this is the thing: is that are we talking here about, because they try to make draw the distinction here between what is often sometimes referred to as tax evasion and versus tax avoidance. What are we dealing with here?
So, in this instance, it's neither a case of evasion or avoidance necessarily, but simply non-compliance. Because remember, with regards to evasion and avoidance, there's different elements there that are necessary to classify those. Whereas evasion is an outright crime and avoidance is generally very frowned upon and has an element of unlawfulness to it. Right? So in this instance, we're looking at non-compliance, and this is something that has been a long time coming. Because if you look at the media statements from SARS over the last year or the last 2 years, Kieswetter has been telling taxpayers and tax practitioners and basically everyone that he wants to get the Revenue Authority back to where it was. Because if you recall, many years ago, SARS was one of the top 3 revenue authorities in the world. And that is the direction that he wants to take it back to.
Right.
So yes, he's enforcing collection, and he's enforcing the criminality of non-compliance.
And I see that there's specific mention made here of expats or South Africans that are living abroad. Just tell us why in this instance, or what their responsibilities or obligations rather of South Africans in other countries, in as far as paying tax in this country are.
Yeah. So remember, as long as you're a tax resident in South Africa, you do have an obligation here, because in South Africa, the tax system is resident-based and not source-based. So just to differentiate very quickly, in a source-based system, you're only taxed on revenue generated in specific country, whereas in a residence-based system, even if you're working abroad for 5 years, you're still South African resident, which means you still have an obligation, but in certain instances, depending on your time out of the country or in the country, that is when you can apply the double taxation agreement.
Meaning what? What does the double taxation agreement mean?
So the double taxation agreement will basically stipulate which jurisdiction has a taxing right, and that is dependent on your time in country and out of country. Typically works with a margin of 183 days. And then you must also remember that there's something called foreign tax credits. So, for example, if you are taxed at a higher nominal rate in the other contracting state, then you would have a credit in South Africa. Or if you are taxed at a lower rate in the other contracting state, then the deficit must be paid in South Africa.
Right. So no longer, it's not just a case of incurring penalties if you are not compliant to tax, but actually criminal charges could well come your way.
Yes, this is correct. Because there was the Tax Law Amendment Bill. And in terms of the Tax Law Amendment Bill, it introduced the element of negligence. So previously it would speak of willful behavior on the part of the taxpayer in terms of, as you mentioned earlier, either evasion, avoidance, but some action akin to one of those.
Yeah, I'm going to have to leave it there. Jashwin Baijoo, he's a legal manager for Africa Tax and Compliance at Tax Consulting SA. Thanks so much for coming on. I really appreciate it.